This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. We got CPI out of the way, so to speak. Yes. It is a little bit hot, as expected. So we've got inflation has jumped to 4.2% year over year in May, the highest in 3 years, and up from 2.4% in February. Why so hot? Well, because obviously before Iran war, energy prices were lower. So higher gas and energy prices drove 60% of the gain as expected. And shelter and food, okay, contributed, but shelter's very, very lagging. So here we are. Monthly increase was 0.5%. Core inflation, excluding food and energy, was 2.9, highest in September. Anyway, you see what's moving over here, right? And so lots of fractals have been overlaid with 1973, where it starts to pick up speed to the upside. That would happen, obviously, with continued escalation. And we've got that. So let's see how that all works. Now, imagine you're Japan. Producer price index year over year came in at 6.3%. The forecast was 5.6%, and the previous was 4.9%. So Japan has some bigger issues. And on top of that, the governor, chances, for me anyway, of this June meeting next week having a delayed rate hike. Very, very, very slim chances of a delayed rate hike, right? Because it's already getting priced in, but it's very possible because Governor Ueda has been hospitalized. Could be the excuse that they're looking for to push it off to July. For some strange reason, I still see July. So that's what I'm saying. Now, Besant and the rest will try lots of ways to get this intervention underway. But if Ueda is hospitalized, it could be a reason for pushing that out. Anyway, we've got Bank of Japan next Tuesday, FOMC on Wednesday. I've talked about all that. We've got CPI out, which is basically spiking to 4.2%, the highest in 3 years. And then we've got lots of Japanese inflation measures also because they're 90% dependent on imported energy, and those costs have moved very strongly higher. So part of this dollar yen focus that I have had recently, not last year. And I said, I'm not worried about yen carry trade unwind last year. And I said it in January. I think it's 6 to 9 months out. Well, we're in that sweet spot now of June to September, where I think it's not a question of if, just when they will hike, and then what happens with yen, specifically as it relates to leveraged funds that are currently very, very short. For example, SOFR futures and the rest. We have a basis trade. We have a dispersion trade unwind, which triggered last week. I wrote about that. You get this whole dispersion trade unwind detailed on June 2nd, which happened to be the top, lucky or good. EWY, IGV, and the indices all have rolled over very aggressively into Friday, follow through, Monday bounce and got sold, Tuesday bounce and got sold. And here we are Wednesday, and I'm going to show you those levels that have almost hit. For SPY, they have, but not for the Qs. So I want to show you that in a minute. But anyway, my point is, in talking about this, basis trade, convexity, dispersion, yen carry trade, it's a lot, I know, but it's very important if you are a bull, because this is when we start to come in with market digestion and correction. And right now we have to watch yields more closely than usual. We have to watch the dollar yen more closely than usual. So this dispersion trading that I highlighted, and basically definitely the trade is protection. Also Iran war escalation is absolutely picking up speed. So Trump has already said he's going after it again. And the whole thing is just frightening, but frustrating. And Friday's semiconductor sell-off, which torched $1 trillion in market value, as Luke said, is not about SpaceX, right? So we also have Broadcom that was very cautious on the AI chip outlook. We Sienna sell-off post earnings. We also have, by the way, the semiconductor index dropped 10%. That's a big deal. So a synthetic rally cannot afford to stall, and it's stalling. And it's stalling also in all those option calls that were furiously getting accumulated, and then all of a sudden, boom, right in the kisser. Then they're short duration too. And then you've got this morning SoftBank getting a loan for $6 billion for OpenAI. It's all circular round trip accounting and such, but basically their margin loan is stalling. So their ability to leverage in the open market, borrow more money against their OpenAI stock to keep funding OpenAI is now meeting a wall. Check it out. A SoftBank attempt to get $6 billion OpenAI margin loan stalls. You never want to hear the word stalls. Margin loan stalls, those three words, very dangerous to bulls because you cannot have a synthetic rally stall, both in options and in credit and in equity pricing.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.